Wow, what a crazy trading day that was here today, guys. We got a massive comeback in the stock market. It was looking ugly. It was looking like,
oh my gosh, a stock market panic might set in.
And then all of a sudden at the lows, things started to bounce back, okay? So we got to talk about this into depth, why this happened, and some very interesting things I saw out there today, okay? So the Dow Jones, it opened up down several hundred points. We'll get into why that happened right off the bat here. And it just kept getting worse and worse for the first hour or two in the market until next thing you know, we were at around the 24,200 level. And then all of a sudden we kind of bottomed there and things just started to bounce back. And although we still finished the day negative, it was a 0.3% negative day when it was going to be a very, very ugly day. Like we're talking about a 700 point swing there, okay? Now, why did the markets go down big here today? Well, basically it happened on the overnight, okay? On the overnight, basically news came out that Huawei's CFO had been arrested, all right? And you might think, well, what's a big deal about that? Why does this matter so much? Well, with everything that's happened with the trade war between the US and China, things had looked like, okay, you know, we might get a deal done there sometime within the next few months. That's what happened over the weekend. You know, the tariffs got announced that they're not going to 25%. They're going to stay at 10% for the next until like basically March 31st, unless a deal can't get done in there or there's no progress. So it was looking like, okay, things are on the up and up. We might get something here, okay? Then all of a sudden you had China come out and say that, you know, we're confused about Trump's comments. Why is he acting like this is a victory lap or something? And you had that drama, and that's what sent the market down so big, you know, yesterday. And then all of a sudden today, you have a situation where Huawei's CFO is arrested, which Huawei is a huge Chinese company, and all of a sudden people get real scared. And it's like, you know, a 4-year-old, basically a 4-year-old. You tell them you give them, you even mention that you might get them some ice cream or something, then you're already like you have to give them that ice cream, okay? The stock market can act like that sometimes, basically, where the stock market, if they even get a hint of something happening, get really excited, and then if you take that away from them, they, you know, it just gets really ugly. And so now the situation with the Huawei CFO being arrested, a lot of people are scared that this will hurt trade negotiations even more now at this point. So that's why the markets went down huge, but things started to bounce back throughout the day. Part of the reason, I think, is Leon Cooperman came out and basically he came out right around when the market was at its lows today. They did an interview with him, and Cooperman says the market will end the year higher from this dip because there's no signs of a recession. There's no sign of a trend change. Leon Cooperman, the billionaire investor and founder of Omega Advisors, tells CNBC, "I could be dead wrong, but my position is based on no recession, inflation not a problem, the Fed is far from hostile, bonds are not competitive with stocks, earnings are growing, employment is growing," Cooperman says. These were very, very, very positive comments, and basically this news broke like almost right around the time when the stock market was really at its lows and was just getting really, really ugly. And sometimes you could have something like this happen where you know, a billionaire that's really famous like this in the stock market world, right, can come out with some either really positive comments or really negative comments, and it can literally help, you know, make the market go up or down. I've seen it many times with both situations where, you know, a big hedge fund manager or whatnot will come out with a really negative statement, or Ray Dalio or somebody like that, right, will come out with a really negative statement and will just send the market down. In my opinion, part of the reasons why the market recovered was Leon Cooperman, because literally right when this news broke that of his comments, all of a sudden things started to bounce back. Now, that's not the most interesting thing I saw that Leon Cooperman said today. The most interesting thing I saw is he says Leon Cooperman says the SEC needs to investigate computer trading for causing the Wild West with markets. Omega advisor and billionaire investor Leon Cooperman says he'd like the SEC to explain why it hasn't reacted to the rise in algorithmic trading. He says, quote, "Get somebody from the SEC to explain why they eliminated the uptick rule and what do they think about these quantitative trading systems," Cooperman said. "They've created a tremendous amount of volatility in the market, scared the public, and effectively raised the cost of capital to business." This is something that, you know, I remember in the early days of me investing, like the first few years, I remember this was something that was talked about a lot. The algorithmic trading, the computers are taking over and whatnot. And in years when the market does pretty well and there's not much volatility, the talk kind of goes away. But in years when all of a sudden there's a lot of volatility and there's you know, the markets get really volatile, you know, it kind of gets on the forefront again. And we got to think about it in this respect. The financial markets, the public markets, what are they for the greater good of. They're supposed to be for the greater good of everybody, okay? People can invest in the stock market. They can build wealth through that. The average person, okay? It doesn't mean they pick individual stocks. They just invest in index funds and things like that. They grow their wealth. Companies can raise capital that way. And the markets are supposed to be a place where everybody benefits, okay? Everybody benefits. But when you have a really volatile markets, not everybody benefits, okay? A couple very, very small groups of people really benefit from volatile markets, and that is really it. And everybody else does not benefit, okay? Now, in a volatile market, the two groups that are helped, one is like short-term traders slash speculators, and we can even throw like investment banks into that basically make trading commissions off of their clients trading a lot of activity, okay? That's a first, people that are just trying to, get little change here and little change there and make money on these volatile markets and playing things like the VIX, right? That's definitely a way you can make money, but that's a very, very, very small percentage of the population actually does something like that. The second group of people that benefit from a market situation like this is people like myself who get to buy certain stocks for much, much cheaper because of the insane volatility than they would have ever, imagined getting some stocks for, okay? This is another very, very small group of people that are long-term investors that don't really care if what a stock price is next week or next month or next year. We're in it for 3, 5, 7, 10 years down the road, okay? And people like myself get to buy stocks that are at extremely cheap valuations, much cheaper than you would ever get to buy them in any other situation, okay? Strictly because the market's just trading down and stocks are being sold and the computers are taking over and all this type of stuff, okay? This is another extremely, extremely small percentage of the population. So between the short-term traders who are trying to, make money off this volatility, the speculators even, and then you have the investment banks and people like myself who are long-term investors who get to buy stocks, specific stocks for much cheaper valuations than they should have, ever imagined to get them for. These are very, very, very small percentages of the population, okay? We're talking about like less than 1% of the population when 99+% of the population isn't really benefiting from this whole situation, okay? So who does this hurt, all right? This hurts the masses, okay? First, businesses of thinking of going public, this hurts them. So whenever the markets get insanely volatile, you see these huge swings in the Dow, 500 points, 700 points, 900 points, 1,000 points. It makes all the papers and it scares a lot of big companies that were thinking of going public and raising capital. They say, dang, we don't want to go public in this sort of market right now. Every time there's a lot of volatility in the market, the amount of companies that want to actually go public start sliding back because they say, well, we don't want our stock to go down and get killed right off the bat. Maybe that hurts employee morale. And then when they don't get to raise that capital, it takes them more time to go ahead and reinvest back into the business, maybe hire more employees, maybe build factories and things like that, okay? So it slows down the process. It's not a good thing. Also, all this volatility in the stock market hurts the overall business confidence out there, okay? By businesses, when they see on the front pages, well, I shouldn't say the front page of the newspaper because no one reads the newspaper nowadays, but when they go on the news, on Google News or whatever, they go on the financial websites and they see this news, oh my gosh, the Dow drops 800 points today. Wow, the Dow, had a 1,000-point swing today, 1,300-point swing. Oh my gosh, the market's gone down so much. Look at all these stocks down or something. It hurts overall business confidence, and business, CEOs and whatnot start saying, dang, maybe the markets start to get weak. Maybe the actual economy is going to start to get weak because they see the stock market going down. They see all this volatility and they start getting really, really scared. So it hurts overall business confidence, and a lot of executives start saying, maybe we should pull back the reins. Maybe we shouldn't invest as heavy. Maybe we should be a little, more careful with our capital right now because maybe things are going to get ugly. And then that just puts in a situation where business confidence is hurt more and more. And it's like a fulfilling prophecy on itself. It also ends up hurting real estate prices. Whenever the market gets really, really volatile, it hurts the housing prices, especially on the high end. Once the high end housing prices start getting hurt, that starts hurting, down the road. But the high end's what usually gets hurt first because they see the volatility in the market. The high end of the housing market, the real estate market, is usually the ones that are most in tune with what's going on with the stock market. When that high end starts getting hurt, it's like a trickle down effect in the little less high end homes start getting hurt as far as the real estate prices. Then you kind of get down the middle class and it goes from there, okay? So whenever the markets are volatile, whenever the markets are weak, it hurts real estate prices. Also hurts consumer spending. Whenever people, see all these negative headlines out there about, weakness in the markets and the stock market's freaking out, a lot of people that aren't very educated think the stock market is right all the time when the stock market is usually just drunk, okay? The stock market consistently either overprices stocks or underprices stocks consistently throughout history, okay? It either gets way too bullish on stocks overall and maybe specific stocks, or it gets way too bearish on stocks overall or specific stocks, okay? It's consistently throughout history. The stock market always misprices stocks, okay? But what the masses think is they think the stock market is the tell to where the economy is or where it's going, when a lot of times the stock market just is betting too far on one side or another. It either thinks things are way better than they expect or way worse than they expect. It happens all the time in the stock market. The beautiful thing for individual stock pickers is we can come in and scoop up shares when the stock market misprices it. We can either short shares if they get too elevated or buy put options, or we can go ahead and invest in companies that the stock market has just gotten way too negative on, okay? But the masses actually think the stock market is like a gauge on the overall economy, and when the stock market's weak, when there's a lot of volatility, when they start to read these headlines, maybe they start saying, oh, maybe I shouldn't spend as much, maybe I need to start actually saving my money and things like that, which isn't necessarily too bad of a thing, but at the same time, it does hurt consumer spending. When consumer spending gets hurt, guess what? It reiterates in business's brain that, oh my gosh, maybe things are getting weak, maybe those headlines are right. It's a fulfilling prophecy, okay? It hurts retirees. Retirees, rely on, their stock market funds so much, okay? The retirees do. So whenever you got this volatility in the market and you got the markets going down, and retirees are freaking out because they're like, oh my gosh, I'm retired now. I have no way of making money. My wealth is going down because most of my money's in the stock market. It hurts the retirees, and we know the baby boomer generation right now is retiring in mass, right? And lastly, it hurts new investors. So one side of me loves when new investors come into a volatile market. Like when I came into the market in 2008, 2009, it was like ridiculously volatile, okay? It makes today's volatility look like a joke, really, okay? But the great thing I loved about that is it really either makes you or breaks you very early on. But unfortunately, most new investors, if they come into a super volatile market, they're going to be scared away just because there's so much volatility. And if they're investing in stocks, and most people that have bought stocks in 2018 are down on their positions. So most new investors that have come into the market in 2018 think, oh my gosh, this is just a place where I lose money, okay? It's almost the opposite of the investor base that came in 2017. People that came into the market in 2017 almost guaranteed to make money, okay? Most stocks had an amazing year in 2017. So if you came into the market, started buying stocks in 2017, good chance by the end of 2017 you had made money. You were very positive on your accounts. 2018, complete polar opposite. If you bought stocks in 2018, you're almost guaranteed to be down on your positions. So unfortunately, most people get scared out of the stock market who are new investors because they think, oh my gosh, the stock market's a scam. I just lose money in the stock market. Oh my gosh, and they judge off short term because they have no long-term basis to go off of because they're just getting in, right? However, on the flip side, only the strong survive, and the ones that are really built for this can come into a volatile market and realize this is just in the game, and you got to get used to it early on because trust me, the markets will always be volatile. It comes up every couple years, every 2-3 years. All of a sudden, the market will get very volatile. It just happens. It's consistent. It'll go on forever. But honestly, if we're looking at it from the perspective of should the SEC look into more algorithmic trading in this type of stuff, in my opinion, absolutely they should, just for the mere fact that if you're causing unnecessary volatility in the market, it doesn't do good for the masses. That's the bottom line. All it does is actually hurt things for the masses. The more volatile the stock market is, the more it hurts the masses out there, the more it helps a very, very small percentage of the population. So in my opinion, it should be looked into, but needless to say, we'll probably still be in a volatile market for quite a while until we get a trade deal done. If we get a trade deal done, the market should continue to be volatile. You'll probably see big swings, one day really positive because maybe some good comments come out, one day maybe really negative because something happens like the Huawei CFO's arrested. Like, that's just the name of the game right now. We just have to get used to it. So anyways, hope you guys enjoyed this. Let me know your opinion down there in that comment section. As always, thank you for watching and have a great day.